Hi everybody, this is another lecture for topic 7, job order costing system. So in the previous lecture, I have explained about how to calculate cost for a job. Just to refresh your memory, to calculate cost for a job, the formula is very simple. Total cost for a job equal to direct material cost plus direct labor cost plus manufacturing overhead cost. To calculate the overhead cost, you have to do two steps. The first one is to calculate the predetermined overhead rate or POHR, and then the second step is you calculate the applied overhead. And then I have told you that when you calculate the overhead cost, you use the budgeted or estimated data. Okay, in this lecture, I will explain about the underapplied or overapplied overhead costs. Okay, let's see. Okay, problems of overhead applications. When you calculate the total cost for a job, and for the overhead cost, you use applied overhead. When you use the applied overhead, you use the estimated or budgeted data. So one of the problem that will happen is at the end of the year, you will get two total for the overhead cost, for total overhead cost for the business. One is total overhead cost that you calculated using estimated or budgeted data. The second figure is you will get the actual overhead cost that you have recorded in your journal or ledger. So there are two numbers or figures. Total overhead cost you calculated using budgeted data, and second figure is actual overhead cost that you have recorded in your journal. So let's see how to settle the difference between these two figures. Okay, see the first point there in this slide. The difference between the overhead cost applied to work in process and the actual overhead cost of a period is referred to as either underapplied or overapplied overhead. And then see the gray box. Underapplied overhead exists when the amount of overhead applied to jobs during the period or during the accounting period using the predetermined overhead rate is less than the total amount of actual overhead incurred during the accounting period. Okay, when the total applied overhead cost lower than the actual overhead cost, we call the situation as underapplied overhead. And see the brown box, overapplied overhead exists when the amount of overhead applied to jobs during the accounting period using the predetermined overhead rate is greater than the total amount of overhead actually incurred during the period. So overapplied overhead is a situation where the total overhead cost that you have calculated using the budgeted data or POHR is higher compared to the actual overhead cost recorded by the business or paid by the business. Okay, this situation always happen because the budgeted data always different compared to the actual data. Okay, let's see. This is like a scenario or example. Best company actual overhead for the year was 650,000 with a total of 170,000 direct labor hours worked on jobs. How much total overhead was applied to pair company's job during the year? Use pairs company predetermined overhead rate of $4 per direct labor hour. Okay, so let's see. See in this data, the actual overhead cost was 650,000. Okay, so that is the actual overhead cost, 650,000. So how much is the applied overhead cost that the business calculated using POHR during the accounting period? So applied overhead equal to predetermined overhead rate times actual allocation base or actual direct labor hours. Applied overhead equal to $4 per direct labor hour. The POHR is $4 per direct labor hour. And the actual direct labor hours or actual allocation base is $170,000. Sorry, 170,000 direct labor hour during the year. So the total applied overhead cost during the year equal to $680,000. So now you see the actual overhead was $650,000, but the applied overhead during the year equal to $680,000. So that situation is a situation where we call it overapplied. Why overapplied? Because the applied overhead is higher compared to the actual overhead. Okay, it is an overapplied overhead situation. Okay, that is one thing. You have to know how to calculate whether a business is having underapplied or overapplied overhead during an accounting year. And then this is another example. Let's see. Tiger Incorporated had actual manufacturing overhead cost of $1.210 million and a predetermined overhead rate of $4 per machine hour. Tiger Incorporated worked 290,000 machine hours during the period. So Tiger's manufacturing overhead is overapplied or underapplied. So you use the thing that you have seen in the previous slide. First, you have to calculate. First, you have to look at the data here. The first data that you can see is the actual manufacturing overhead is $1,210,000. So the next thing to do is you have to calculate the total applied overhead during the year. Okay, total applied overhead during the year is equal to POHR times the actual allocation base during the year. So see the blue box there, the POHR is $4 per hour, and the actual allocation base or the actual machine hour during the year is 290,000 hours. So applied overhead equal to $1,160,000. So, and then how to calculate whether the situation is over or underapplied? So you compare the actual overhead and the applied overhead. You can see there in the blue box, actual overhead is $1,210,000, and the applied overhead is $1,160,000. So the difference is $50,000. The difference is $50,000. So you see, which one is higher, the applied overhead or the actual overhead? In this situation, the applied overhead is lower compared to the actual overhead. So the situation is called underapplied. Underapplied overhead, and the amount is 50,000. So you have to know how to calculate this. Okay, now after you have calculated the amount of over or underapplied, you have to know how to settle the difference. Okay, there are two methods that can be used to settle the difference. The first method is the amount of over or underapplied have to be allocated to three accounts: work in process account, cost of goods sold account, and finished goods account. Using this way, it is a bit complex. and you have to credited 3 accounts if the situation is underapplied. The second method uh, is simpler. The second method is you just close the difference between the over and under applied. Between the applied overhead and the actual overhead. Uh, you just credited or debited the amount in the cost of goods sold account. So you just have to remember this. If there is a question asked you how to record the over or under applied of overhead at the end of an accounting year. So if that is the question, then the answer is to close the amount in 3 accounts, which are work in process, finished goods, and cost of goods sold. Or the second method that can be used is to close the amount in the account cost of goods sold only. Okay, the first method is complex. The second method is simpler. Okay, if you check the slides, you can see the way to explanation about the way to record in the ledger, or in the ledger of in the account of cost of goods sold and other accounts. So this is the first method, I think. Okay, you don't have to worry about this, but you have to know, like I said earlier, if a question asks you how to record the difference, how to record the over or under applied of overhead, then the answer is there are 2 methods. The methods that you have seen in the slide. Okay, and then there are something related to the issue of overapplied and underapplied overhead, the effect of this on the profit of a business. Don't have to worry about that. So this is another point. In the examples that you have seen above, I have told you that when you have to calculate the applied overhead, you use one allocation base. But in some businesses, particularly big businesses, they use multiple predetermined overhead rate. The logic is the more the allocation base used to calculate the applied overhead, the more accurate the overhead cost to be charged to a job. But in this course, if you know how to use one allocation base, that is sufficient. Okay, another thing that I want to share with you is you have to know that job order costing can be used in manufacturing businesses, and also can be used in service businesses. An example of a service business is like an architect firm. An architect firm is a business that should use job order costing, because the architect service, every architect service is unique. And then at one accounting year, there are many architect jobs, architect service job. So how to calculate the cost for every job? The business can use job order costing to calculate the cost for every architect service job. In the hospital, job order costing system also can be used, because every patient is unique. This person has heart problem, another person has skin problem, another person has other problems. So how to calculate cost for each patient? So job order costing can be used to calculate cost for each patient in hospital or clinics. And then here, another thing that you have to know is now the information technology or the computer or the software are very advanced. Information technology can help accountants to calculate costs quickly and maybe more accurate. Thank you very much. This is the end of this topic 7. Do not forget to write your name and metric number in the comment section. That is your lecture attendance.